So tell me, what do you get when inflation cools, unemployment rises, and markets start whispering rate cuts? Well, you get a Friday session where the US dollar tries to stay composed while the rest of the market starts planning the after party. Because today's theme is simple: softer US inflation is changing conversation. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, everyone. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief. In the next few minutes, I'll break down what's moving markets today. Fundamentals first, then we're having a look at technicals, and we'll do it without the noise, without the hype, and definitely without pretending the market has ever respected our weekend plans. Let's start off with GBP USD, aka the cable, because this one is being pulled by two central bank narratives all at once. The British pound strengthened towards $1.34, approaching 2-month highs as markets digested the Bank of England's latest decision. So the Bank of England cut rates by 25 basis points as expected. But the key detail is that policymakers were divided and signaled that there may be limited space for further easing. The vote split was 5-4. Governor Andrew Bailey backed a cut this time. The Bank of England reiterated a gradual pace of further easing. Markets are now pricing in about 62 points of easing by the end of next year, slightly less than before the decision. In the UK macro picture, inflation slowed to 3.2% in November, its lowest in 8 months and below the Bank of England's 3.4% forecast. GDP contracted for a second consecutive month in October, and private sector wage growth continued to moderate. Meanwhile, in the US side, the dollar index is hovering around 98.4, set to finish the week largely, unchanged. But the big driver is the inflation surprise that we got yesterday. Headline CPI came in at 2.7%, below expectations of 3.1%. Core inflation eased to 2.6%, the slowest pace since early 2021. And earlier this week, unemployment rose to 4.6%, the highest since 2021 as well. The combination of softer inflation and cooling labor market is feeding expectations that the Fed has more flexibility to cut rates in 2026, even as markets still expect policy to remain on hold in January. Also in the background, US President said he will soon announce the next Fed chair, and names being watched include Hassett, Warsh, and Waller. So GBP USD is essentially balancing Bank of England hawkish cuts, support versus a US dollar that isn't collapsing, just quietly sweating. Looking at the chart, price is sitting around 1.3375 after pulling back from the mid 1.34 level. Key technical points to look out for, the breakout through 1.334 was a key bullish trigger. Above 1.347, the door opens to, reclaim 1.355. On the pullback side, support sits near 1.332, then 1.315, followed by 1.3 flat. A decisive break below 1.332 would negate the positive outlook and expose 1.315 and potentially sub 1.31 levels. So in other words, actually the bias stays constructive while it holds key support. But the market is clearly not sprinting. It's more like a jog with a coffee in one hand. Now, let's talk gold, the asset that tends to show up whenever real yields and uncertainty start making people uncomfortable. Gold is trading around $4,320 per ounce today, near its October record high, and is on track for a second weekly gain. The key drivers here, well, that softer US inflation report that is strengthening expectations for further rate cuts. This specifically bolsters the idea that price pressures are easing and supports the case for potential Fed rate cuts. However, there are important caveats in our data. The inflation report was limited by the federal shutdown, which disrupted BLS data collection from October prices and month-over-month analysis. Markets currently assign about a 25% chance of a rate cut in January and near certainty by April. Gold also has a geopolitical tailwind. The US halting sanctions on Venezuelan oil shipments following a tanker seizure, and President Putin reaffirming territorial claims in Ukraine, and also zooming out, bullion is up roughly 65% this year, which is marking its strongest annual gain since 1979. Looking at the charts, gold is slightly lower on the day, trading around 4,319, down 0.3%, with the dip attributed to profit taking and long liquidation. Bullish structure, however, remains intact with clear higher highs and higher lows forming. The first upside barrier is currently sitting at 4,340. A decisive break above this level opens a retest of the record highs near 4,381 and then the 4,400 level. On the downside, if prices stay below the December 17th low at 4,300, sellers could pull it towards that 4,260 level. Further support sits around that 4,200 level and then 4,140. So gold isn't breaking down. It's just doing that classic move. I've rallied, so let's breathe before I try again. Now let's finish things off for today with the FTSE 100. Because while the US was digesting CPI, London was digesting the Bank of England decision. The FTSE 100 regained ground, closing about 0.6% higher, around 9,835 during yesterday's session. And this was after the Bank of England's 25 basis point cut, with guidance sticking to a gradual easing path. Traders pared back expectations for further cuts, having anticipated a more dovish tone after softer inflation data. Standout movers, however, was Whitbread, which surged around 6% after activist investors, which was Corvex, that called for a strategic review following a 6% stake. Nilo also advanced around 4%, supported by gold, and Rentokil Initial rose around 3.6% to almost 3.85% after an upgrade to buy and higher at a higher price target. On the downside, weak performers include B&M European Value, Bunzl, and United Utilities. Also notable, BP fell 1% after announcing a surprise leadership change, naming Meg O'Neill as the next CEO. Looking at the charts, the FTSE is holding close to recent highs, with an all-time high listed at 9,930. And the move higher was aligned with the Bank of England outcome and sector stock-specific drivers, especially gold-linked strength. The next barrier to overcome for the FTSE is 9,850. After that, it's the resistance at the all-time high. Near-term support is still strong at 9,780, followed by 9,600. Traders, in other words, the FTSE didn't need a dramatic plot twist. It just needed one decent catalyst and a few strong performers to, well, carry the load. So, what should you be watching next? Well, the dollar finishes the week largely steady. But with inflation cooling and unemployment rising, the bigger question now becomes, does the rate cut narrative keep building into 2026, or does that keep supporting gold and risk appetite? Or does the market suddenly demand fresh proof? And for sterling, after a hawkish cut and a dovish vote, does the Great British Pound keep pressing those highs, or does it pause as the reality of UK growth strain sinks in a little bit? Well, we'll pick it up in the next daily market brief on Monday. And with that, we wrap up your daily market brief brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to atfx.com or click on the link in the description and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.